There are two factors about the unemployment data that came out on the 6th of September 2024 that no one is talking about. And it is extremely important and key to understand. And you know how I know that? A huge fund manager just sent me one picture with two pieces of data on there that made me think, this is a lot worse than they're saying. But where are we with Bitcoin at this present moment? The unfortunate jobs creation and unemployment data caused a bit of a dump down. Not enormous, but people are not confident in the market. Even though we've had a bit of a pullback into range, which is a good sign. Let's see where this goes. So on the face of it, the unemployment data and job creation data wasn't amazing, but it really wasn't as bad as people were expecting. People were expecting really bad numbers. I mean, of all the data that's been coming out, people were bracing themselves for an explosion unemployment and jobs creation. Yeah, jobs creation was lower than expected. They expected it to be over 160,000. But unemployment rate came in as expected, what they were thinking about. This should have given some level of peace to some of the traders and investors, but it had the complete opposite effect. Yes, the job market is contracting, but the Fed wants that to happen. That's why interest rates are high, and it's a part of the notion of rolling back inflation. However, there is something when you read into these numbers that's far more concerning. And it shows how cherry picked these numbers are and where the economy actually is. If you look at where the jobs are being created and the amounts that are being created, I saw from the hedge manager's text message, which I've been sworn not to be able to show, but I'm going to give you the numbers. At this job report, there was minus 423,000 full-time jobs lost and 527,000 part-time jobs created. What this means is that the full-time employees are losing their jobs and they're clamoring for anything they can get, part-time being the place where they land. That isn't a buoyant jobs market. That is a market that is desperate for jobs. Furthermore, if you look at who are getting the jobs, you see that Native Americans lost over 600,000 jobs and foreign employees gained 1.3 million jobs. That shift between the two is extremely worrying. And on top of that, if we look at all the past non-farm payroll, every single one of them has been revised down. And not by just a few hundred or a few thousand, by extreme levels. When I say extreme levels, the previous one was revised down over 800,000 jobs. All this equates to extreme volatility in the market. The Fed is saying things are good, soft landing is coming. But once you read into the numbers, you see things are not very, very good. Things are going in the wrong direction. And that is why we've seen an enormous jump up in the VIX. Remember, anything above the 15 mark, 17 max, is very, very problematic. That is chop, chop, chop territory. So I would be extremely careful on any leverage trade. I would sit back and wait a little bit because all of what is going on right now hasn't really digested into the market. And all of these numbers and all these factors are pushing more and more towards a recession. In my opinion, we are now in the territory of we are going into a recession. It's more of a when rather than if. Now, whether we will get a run up before that happens, I believe is a high possibility, as is always the case. I think after the September period, or towards the end of the September period, we will start seeing a bit of a run up after the rate cuts. We will see the elections causing a bit of a run. We'll see the new conversation and debate that's happening between Trump and Kamala causing a lot of chop in the market, possibly positive. Don't forget, if the notion of crypto comes up, as it is a key point now in the election, that will cause a pump. There are things still out there that could cause this to go run up before the massive recession. But these numbers are not good. And rising unemployment, however which way they fudge it, because imagine, this is a fudged number and it's still not good. This is the best they could do. Points towards a recession coming. Just when, I'm not too sure. But the whipsaw reversal we saw in yield curves means it might be later on in the year rather than straight after the rate cut. Anyway, like, follow, share. I'm Alvarez, seven-figure crypto investor, and just show these to as many people as possible. No one talks about these things. No one gives you these data, and just follow your guy. Anyway, I'll catch you guys later.